What's going on with the dollar as a unit of account, and how long will the dollar be a viable option for us to use in a world of ever-increasing debt and volatile change? I'm sitting down today with Parker Lewis, the author of many great things, including a piece that went super viral called Gradually, Then Suddenly, and now it's in a new book that I'm super excited to read. Can't wait to read it. Parker Lewis has been in the Bitcoin community for a long time, great thought leader. Now the founder of Zaprite, which is helping businesses scale into Bitcoin payments. We'll talk about that. Parker, thanks for joining me today.
Mark, great to be out here.
So we're jumping right into the middle of a conversation. And we're talking about debt. We're talking about inflation. We're talking about real estate and leveraging debt for assets, and how all that fits in with Bitcoin. And I think there's a synergy if we learn how to use them properly. Let's just jump right back into where we were. So a lot of that assumes that we have a functioning debt market and a dollar. Which I would agree, of course. Like, there's no debating that fact, I don't think. I don't think you debate that. The debate would be, how long does that take?
Right.
So gradually, then suddenly, when does the suddenly part come?
Yeah.
So I'd love to hear your take on that.
Yeah, so my perspective is that, or maybe I'll jump to the conclusion. I personally don't see the dollar remaining viable as its current system or current construct for another 10 years.
Okay.
I feel like a decade is a lot of rope. And the way that I think about that is that the second that Bitcoin becomes larger than the dollar system is when the dollar system's accelerated decline, the suddenly part of everyone scrambling through that single door as an exit. If you think about 10 years time, Bitcoin's been around for 15 years. It's worth over $1 trillion. And very few people still understand it.
Mm-hmm. Very few.
We go through 3 more halving events. The one that is about to happen in less than a month, and 2 more epics. Having 1, 2, and 3. How much knowledge distributes? And if
12 years.
12 years. Well, I'm saying there's a halving in a month.
Oh, so this one. Okay, so 8 more years.
8 more years for 3 halvings.
Okay, got it.
Right? So, and then the amount of knowledge distributes that happens over that period of time as Bitcoin as a monetary supply hardens and hardens. Yeah. Well, if we're right now at $1 trillion, for Bitcoin to 10x, if you were to think that, will 10x more people figure out Bitcoin between now and then based on the monetary supply that exists today, Bitcoin is already larger than the dollar. If you were to think that 100x.
When you say bigger than the dollar, what do you mean? Like $80 trillion of currency in the U.S.?
I'm talking about like right now there's between 8 and 9 trillion of actual dollars that exist in the system. There's broad money, which are credit instruments, deposits.
Okay. So that's like the 80 trillion.
That's 80 trillion in the world. I'm talking about
80 trillion U.S. dollars around the world?
No, 8. There's 8.
$8 trillion.
Yeah.
Okay.
There's 80 trillion of what. 80 trillion is a decent estimate for all of the base money, or I think all the broad money in the world.
Okay.
So I'm talking about base money in just the U.S.
Okay.
U.S. is the global reserve currency. It has about 8 trillion of the actual dollars, the left side of the bank's balance sheets.
Paper dollars.
Paper dollars and digital reserves at the Federal Reserve. Now, when you start to add in things like checking deposits that individuals hold, which are forms of credit, that gets between 20 and 25 trillion for just the U.S. Okay. The 80 trillion number that you have in your head is that 20 to 25 trillion broad money in the U.S., but for the entire global system. My point is that Bitcoin is base money. Okay, so the right way to compare it to a system is base money to base money.
Okay.
If a credit system starts to build on top of Bitcoin, then that starts to become more comparable to the 20 to 25 trillion in the US. But if we're just thinking about base money, if in the next 10 years, if 10x the number of people demanded Bitcoin, but realistically, if we're talking about 10 years, if we follow traditional looking at past metrics that 10x the number of people typically figure it out each cycle, then let's say 100x. Well, if it's 100x, then Bitcoin's 100 trillion.
Right.
Bitcoin's starting to dwarf the dollar system
Right.
as a whole because it's global. And if you start to think about it in that context, in my view, when Bitcoin starts to become the largest currency in the world, it becomes more obvious to everybody that that's the way the world goes. And my personal view, which we can talk about, is that global Bitcoin adoption can't happen. It's like the other side of the same coin is the euro hyperinflating, the yen hyperinflating, and the dollar hyperinflating. That you have this choice between one or the other. As it becomes painfully obvious, you're either storing wealth in Bitcoin or you're storing wealth in dollars in terms of your money. Now, we'll talk about other assets that actually are productive, that generate things like Bitcoin and or your ability to acquire Bitcoin or your ability to acquire dollars. But my view is that when Bitcoin becomes larger than the dollar,
Which is 8 trillion.
which is 8 trillion today. Now, it is dynamic because they're going to have to print a lot of money, so in 10 years, maybe that 8 trillion is 20 trillion.
Okay.
You know.
Then why gold sitting at 12 trillion hasn't done that? Because gold was the original base money.
Yeah.
Central banks are still buying, well, not still, they're buying gold at record levels right now. The BIS, through the Basel agreements, has had them start to recapitalize with gold. We have talks of central banks, the BRICS back to gold reserves, China with their convertible gold in the Shanghai index, and it's 12 trillion. So it's eclipsed the dollar.
Yeah, I would say that the difference is that gold cannot replace the dollar. In my view, gold failed. And so to think about gold vis-a-vis the dollar and Bitcoin vis-a-vis the dollar.
And why did gold fail? I mean, I agree that gold failed, but I'm
Yeah.
curious your reasons as to why gold failed. Not that I disagree, but I'm just curious where you're
Yeah,
lying.
my definition of gold failing was the fact that the dollar system could be entirely severed from gold, established the end of it, I think at the end of its life. The fact that the dollar started off as a fractional representation of gold.
Sure.
And so gold and the dollar have this relationship that the dollar and Bitcoin do not. And so the way that I look at the world is the dollar wouldn't exist if not gold previously existed. The dollar itself does not have inherent monetary properties. It leveraged gold's monetary properties
To get its start.
Yeah. To say, hey, you can take this piece of gold and come to the bank and get 20 ounces of gold. That's what it initially was.
Yeah.
And then in 1933, as you well know, but for the
35.
audience, they banned private ownership of gold. And then they devalued, it's like, oh, now you actually can't hold gold as a private individual, but also the convertibility of gold to dollars now 34 to 1. So they devalue it. Point is that started the process. It's like if gold was viable as a form of money, in many ways the dollar was a technological solution to gold's limitations, right? Portability, divisibility, like gold, yes, you can divide it, but only through a highly chemical process that's difficult, that requires very expensive equipment.
Right.
And you can't do it in a way that's facilitating trade
Right.
as the economy was advancing. So there was a limitation of gold.
Plus the trust, right?
Yes.
Because we don't know
And
how
then-
pure the gold is or how much it weighs.
Right, and so the solution was we're going to put it in banks, we're going to give you these paper representations,
Right.
and that was actually a technological solution to the limitation.
Yep.
Then so the dollar started as this reserve-backed system. Gold was the reserve.
Right.
And then at the point that it was severed, the dollar had transitioned from a reserve-backed currency to a debt-backed currency.
Right.
The same reason why gold can't untether from the dollar is because gold, when I say gold failed.
When you say the dollar, do you mean all fiat currency or you mean the US dollar specifically?
We were on like Bretton Woods, so gold was pegged to the dollar, and then everything else was every other currency was pegged
To the dollar.
to the dollar.
Right.
So yes, I mean specifically the severance of the U.S. dollar specifically, but that functionally severed
Right.
all other
I'm just
fiat
curious
currencies.
because, you hear about the rise of the BRICS and them trying to launch a gold-backed currency, or as I already said, like China with a gold-backed currency. So I didn't know if you meant
there's an important point because it's kind of be a little bit rabbit holes, but gold cannot do what Bitcoin can do.
Sure.
And the reason why that gold cannot become untethered is because you can't actually convert gold into goods and services. You have to get dollars first. And so what functionally happens is the dollar is tethered to this credit system, and gold is tethered to the dollar's credit system, such that, like, when you look at the great financial crisis, the stock market crashed. Everyone thinks of gold as a flight to safety. Gold crashed. Why? Because it was levered to the dollar too.
Right.
All the gold holders were actually
But all assets plunged at that time.
Right, but the point was, it was because the system was too leveraged. The dollar credit system had become too leveraged, and there was a run on dollars. The people who are out there trading gold, they're not actually using it as money. They're using it to get more dollars.
Right.
Right? And in often cases, they don't actually want the physical gold. I know in many cases they do. But the point is that the dollar's origin was rooted in gold's limitation as money.
Yeah.
The gold, and there's a lot of people, and I don't have any ill will against them, but there's people that think we're going to go back to a gold standard.
Sure.
But when you start to realize that the dollar's inception was because of the limitation of gold as money, and then the fact that it could be severed from it, in terms of when they said, oh, okay, not only can you not own it privately, but now you can't convert gold to dollars.
Right.
You can come get your gold back, France and Germany, but you can't get dollars for them anymore. Right. That was when the dollar was severed from gold. We were never going to go back to that world. We were never going to go back to something that needed the dollar to advance as money. The only thing that can possibly replace it is something that can actually outcompete the dollar. And that's what Bitcoin is doing.
Yeah.
And so when you think about the fact that gold can't actually be used to facilitate commerce in a modern economy, that its ability to untether from the dollar, like, it's going to collapse against Bitcoin. So like the ratio to think about is that, like, if Bitcoin's $1 trillion today and gold's 12 trillion, that too is going to flip. That there's going to be this whole conversion of people that have gold that are going to need to, increasingly sell it to get money to operate in the real economy.
All right, I want to take a break real quick just to let you know that if you're sick of the global elites robbing you blind through frivolous money printing, like I am, then you should be at the Bitcoin 2024 conference in Nashville, Tennessee, July 25th through 27th. It's the largest Bitcoin gathering fintech conference in the world. In 2024, Bitcoin stands as a beacon of monetary freedom, a glimmer of hope amongst a darkening macroeconomic backdrop. Come hang out with me and other top speakers, companies, thought leaders from across the industry will all be in Nashville looking ahead to the next year and beyond. Now, ticket prices are on sale right now, and you can get an extra 10% off if you use my code MarkMoss. But make sure you secure your spot right now. It's going to sell out, and ticket prices go up over time. Use MarkMoss for a 10% off discount. And if you do, send me your code that you used my code to buy your ticket, and I'm going to invite you to a special event that I'm having. So make sure you get your ticket, Bitcoin 2024, use MarkMoss for 10% off, and I hope to see you there.
Yeah.
Because you can actually trade a Bitcoin for a car, a bottle of water, a house, a football team. You can buy a building with it,
right. As opposed to gold, you need to convert first.
You need to actually demand dollars.
Yeah. So
because you can't facilitate trade in it directly. You cannot facilitate direct commerce between gold and things at the grocery store.
Right.
But you can with Bitcoin.
Yeah. So obviously we agree on this. I gave a talk at Bitcoin Amsterdam, and the title was The End of the International Monetary Order. So not just the end of the dollar, but the end of fiat and the monetary order that we have overall. And I said there's two potential paths forward that they're going to try and take us. Either maybe one going back to gold, but it will fail for the same reasons it failed before. So obviously we agree on that. They might try to go back to go to a CBDC. So there's like the M bridge that we're working on. China is working on with the BIS, but that's still fiat, so that's going to fail too. And I don't see how the world moves forward without having some trustless, decentralized, neutral reserve asset. So we agree on the outcome. I'm just discussing the mechanics of this.
Yeah.
And I
was just highlighting to like kind of like, if you think about, because oftentimes people think about like the dollar price of Bitcoin, like what if it's $1 million?
Right.
Well, what if it's 10 million? And if you start to just think about the brass tacks, well, let's just go through the exercise.
So that's where I want to get to. Yeah.
Then it starts to become larger than the dollar system.
Right.
Right. And so if these are two monies competing with each other, and one starts to break out in a way that now I'm big brother me Bitcoin, I'm bigger than dollar, that in that world, it becomes very obvious to the lion's share of people that this thing's Bitcoin is real, and I need to get some now. And so like it's not going to stay in some like gradual stasis forever. Like there is going to be that period of time where it becomes obvious. And in my world, it becomes obvious when Bitcoin becomes larger than the dollar.
Yeah.
And somewhere between $1 million per Bitcoin and $3 million per Bitcoin, you know, obviously it's variable based on how much base money the Fed's going to have to create. Somewhere in that range, Bitcoin flips the dollar system. Yeah. And that's where I see this, you know, basically rush out of the dollar and into Bitcoin for the entire world.
So that's the mechanism that I want to dig into. Just this last weekend, I flew here from Mexico City. I spoke at a conference called Sovereign Man. I spoke to their mastermind, and it's all about being sovereign. And you wouldn't put all your life in all your money in one stock. So why do you have your whole life in one country? You should have flag theory, multiple passports and multiple bank accounts, and you should have gold stashed in vaults all around the world. And I went there and I said, you can't be truly sovereign without Bitcoin. I didn't realize this, but Peter Schiff is actually part owner of this.
I saw a picture of
so then I was the Bitcoin guy, and then I had to go against Peter Schiff. So I make the exact same case as you. The only difference is I think the suddenly part is maybe not so sudden. I think it's further out. So I want to learn your thesis because I don't know, right? I want to explore that. But certainly we agree on the outcome. But let me ask you a couple questions, because if I think about Bitcoin and I think about gold and I think about dollars and I think this from a first principles philosophical level, right? The law of energy, right? Energy isn't created, it's only transferred. So we talk about Bitcoin as like a store of energy, meaning I've exerted energy, my burned calories, I've exerted energy. I don't need to consume all that energy output, so I store some of it in money so I don't have to work tomorrow. I can just spend that saved money, right?
Yeah.
And ultimately, if you think that we don't want money, what we really want is the goods and services that money buys us. So we need places to store our value, our energy, and until we're ready to get the goods and services that we want.
Correct.
Okay. So then if you think about that, then if you think about Bitcoin or just money in general, money is that medium of exchange that could be a store of value, but we found out that money doesn't have to be a store of value. I don't know if that's wrong, but like we store our value in real estate, we store it in bonds, we store it in obviously fiat, we store it in stocks, we store it in gold, we store it in all kinds of things. So the dollar failed as a store of value for sure. Maybe what was that Michael Saylor meme that went around? We have a name for them, we call them poor, people who save in fiat currency. Did you see that?
Yeah.
Yeah.
And I think that it's that everyone's looking for money that best stores its value, right? But storing value is not something that's static. It's in terms of its ability to purchase real goods and services, and we certainly agree on that. That wealth is the ability to accumulate capital and consume things, and to be able to consume more things that we value with less units of time.
Sure.
And
have it buy us more things
and
later.
Looking at a balance in your account or thinking about the things that it could buy is not really wealth. It's you need a good form of money to be able to facilitate trade, and then between those series of exchanges and trades, you need your value that you've traded to be preserved in order to make the next trade. Because if it evaporates between the amount of energy you put in and the energy you got out, that's not sustainable. You can't survive that way.
Right.
And so in the fiat world, like you mentioned, stocks, bonds, realistically, people have started to use those as stores of value because the money is broken.
Right.
And that
a majority of them.
I view it as risk taking. They're actually instruments to try to create wealth, because whatever is on the other side of a stock is a company that's endeavoring to make capital to then earn money.
Right.
But that those things are fundamentally different from what they are in terms of they are actually designed in some form or fashion to create wealth, but they've been used more as a store of value in the sense of
the everyday person with an index fund
Yes.
kind of a thing, yeah.
And I think that world will also go away.
Yeah.
It doesn't mean that stocks and bonds will go away, but they will revert back to their kind of their original purpose was to basically pool capital
Yeah.
to then produce things.
Yeah.
Rather than passively hold because you know that your money is losing
Right.
2 to 4%.
And I agree with you on that. I would definitely agree. So all of Wall Street is built on the fact that people need to store their wealth somewhere and they can't do it in fiat. And once we can store it in just Bitcoin, then it demonetizes a lot of that. And then most of Wall Street and the financial advisors probably go away. But we're still going to need to finance companies and things like that. But
Correct.
it's much more productive debt.
Yeah.
So we certainly agree. And so, I view it as certainly taking a lot of value from gold, maybe eventually at some point all of it. Certainly taking a lot of value from stocks and bonds. Certainly it's taken a lot of value from real estate, but we still need houses to live in. So it certainly takes a lot of that value, but it doesn't mean it goes away.
No, they don't. I just think they will start to become denominated in Bitcoin.
Right.
So, you raise a company and your company's building things and intending to generate a profit. Well, what is that profit stored in? Money.
Right.
And then I take the money and I put it back. I reallocate the capital to go build more to,
Right.
allow the cycle to
So
continue.
the unit of account.
So, right. But then like stock, as my point would be, then the cash flow becomes Bitcoin.
Right.
Right. Like there's a bond.
Well,
and-
everything works the same. It's just the way you measure it. The unit of
Yes.
account is now denominated in Bitcoin. You measure it in Bitcoin as opposed to measured in euro, yen, peso, dollar.
Yeah. First, a worse unit of account.
Right.
Yeah.
Yeah. I just think it happens in a 50 to 60 year time frame, and you think it happens in an 8 year
But
time
do you
frame.
think that, if humans have to have good money to survive, and combination of survive, which I mean by trade, to get things that they can't otherwise produce, that they need to sustain themselves, and then thrive in the sense of produce wealth that enriches their life, and to be able to consume the things that allow for life to be more enjoyable. Well, we know how much money they're printing. We know it can't go on forever, and 10 years is a long time. And Bitcoin,
especially at the rate we're going.
And Bitcoin adoption happens as knowledge distributes. So as there's books like The Bitcoin Standard, my book, Gradually and Suddenly, you doing these podcasts, what I'm saying is think about all the knowledge distribution that happens over the next 10 years because it should accelerate.
Yeah, it goes exponential.
Yes.
Yeah.
And so is it unrealistic to think that the Bitcoin system, in terms of Bitcoin adoption, grows between 10x and 100x over the next 10 years? Because if it does, then it is bigger than the dollar system. And then where we might disagree is, what is the consequence of Bitcoin becoming larger than the dollar? Because my view is, when it becomes larger than the dollar is when it becomes obvious to everybody that this isn't just a shiny object and nothing. The fact that it could be 10 to 100x larger is because people have come to that growing consensus.
And specifically because it has money attributes. Because,
Yes.
again, gold is bigger than the dollar. Real estate, all the other stores of value assets are bigger than the dollar. But because they don't have money attributes, they can't replace it. Is what
Yeah,
you're saying.
and what I mentioned earlier is like the way that I view gold, it's like technically gold is larger than the dollar today, but it is inherently tethered to the dollar credit system.
Because it needed debt
It needs-
added in order to have velocity.
It needs the dollar as an intermediary to get to goods and services.
Right.
Because it's not actually functional as money.
Because and Bitcoin is the first asset that can have pure velocity without debt being added onto it.
Yes,
Yeah.
in my view. And it ultimately shares the scarcity
Yeah.
of gold, perfects it, but provides the direct means of exchange in the fact that you compare the finite scarce asset, which is the Bitcoin supply, with the ability to transfer it over a communication channel, and that you can send the equivalent of $1 billion worth of value just as easily as you can functionally send $10 equivalent of value.
Yeah.
And so if you think about anybody who ever wants to get a good or service that has gold, they've got to take that, and I'm sure there's somebody who's willing to take a bar of gold and convert it for a car at some portion of the country.
Sure.
But
There's not very many.
But it's not practical, and it doesn't happen because of what gold is as a medium, and that is not true of Bitcoin.
Yeah.
And so each time you want something, if you're holding gold, you got to sell for dollars. You have to demand dollars to get goods or services. The thing that you actually want by holding money as a store of value between exchanges, and that limitation is what tethers it to the dollar.
Yeah.
The same thing isn't true of Bitcoin.
I mean, it kind of is, but it's changing rapidly.
It's changing. What I'm saying is, to your point about the monetary properties, it has that scarcity, but one property it has that gold does not is that you can transfer a finite scarce asset over a communication channel.
Yeah.
Like that is the revolutionary thing about Bitcoin.
Yeah.
And so it has a moneyness, the ability to be exchanged that is far greater. And, going back to, well, the dollar wouldn't be here if there wasn't that limitation of gold as a mean of exchange.
Yeah, I mean, again, we agree on the inevitability, and the more I talk about it, the more inevitable it just seems to me. When I was there at the Sovereign Man conference, it just shocks me that these people they're still thinking about stashing gold all around the world. And I'm like, but that assumes, one, that you can get to that gold, and two, that those people allow you to even get your gold, which is archaic to me. But when I was debating Peter Schiff, I'm just like, I bet you I could find way more people here in Mexico City right now to take my Bitcoin than you could get to take your gold.
100%.
Right? When I was in Europe this last summer with my family, most of the money changers I saw accepted Bitcoin as well, which is that they didn't take gold.
Yeah.
But they took Bitcoin.
Because they functionally can't.
Right. So I thought that was pretty interesting as well. So I typically think about the demise of the dollar sort of gradually, then suddenly, in the law of diminishing returns. In a sense, per Keynesian economics, they take it on debt in order to get growth. But with the Keynesian multiplier at like 90%, they start to not get enough growth for the debt they take on. And right now, we're getting about 40 cents of growth for every dollar of debt.
Yeah.
And eventually it's 20,
and it's not sustainable.
And then it's 10, and then there's no growth for debt, right? And so how long does that take? I don't really know, but that's kind of the mechanism that I've been looking at.
I always generally look to history, right? Because like it is very
different. What, history?
I look at history.
Yeah, of course.
So I think we're living through hyperinflation. Remember Jack Dorsey in 2021?
Yeah.
He put out a tweet that said hyperinflation is happening. And
what would you say the definition of that hyperinflation is? Where do we go from inflation to hyper?
There's a technical definition, which is something like
50% a month over month, I think.
Something like that.
Yeah.
But
what would you call it?
I would, my view of it is when your money is losing value so fast that you can actively observe it.
Okay.
Or at least that's the sign that you're in it.
Okay.
But so I use an example of, in 2013, I think it was, GM operated in Venezuela. They had actual auto manufacturing in Venezuela to sell cars to the Venezuelan market. Well, they had to import supplies from their global supply chain to get them to Venezuela. And they held Venezuelan currency, and they would convert, because they would take Venezuelan currency in return for their cars, and then they need to convert that Venezuelan currency into dollars to get real parts to be able to continue to manufacture. Well, it was either in 2013 or 2014, they wrote off their currency reserves in Venezuela by something like 80%.
Mm-hmm.
And at the time, the government adjusted the exchange rate by 50%, like basically a 50% devaluation of money. Within a year or two later, GM had written off all of their currency because it couldn't buy anything. It's like, it doesn't matter what the government says it is, couldn't buy anything. Right. And then when you look up, and that was like 2015, when you look up when did hyperinflation start in Venezuela, 2016. Right. So the currency had devalued 50%. And if you think about where we're at, beef at the grocery store from 4 years ago,
it's 50%.
50%.
Gasoline, 50%.
Right?
Real estate, 50%.
People can observe prices changing. You go to groceries or restaurants, they'll either have things blacked out on menus, or they don't even have menus, because it's not because of not touching things for COVID. It's because the prices are changing so frequently. Right. You can't keep printing menus. So my point is that when we look at the world around us, and we look at patterns of what have happened in hyperinflation doesn't just go from like non-existent to the currency literally doesn't hold value in the prior month. It starts in this acceleration of the decrease in purchasing power in a way that is, once it becomes observable on a month-to-month basis, like it used to be the case where you're like, I remembered when a beer cost $1. right? Well, when it was last month and the beer cost $6 and now it costs $7 this month, that's different than like what it cost when you were a kid.
Sure.
Right? And that's what we're living through now.
Yeah.
And in the GM example, by 2017, they shut down all operations.
Yeah.
So, and then goods become scarce. That's the other side of hyperinflation, that as the money deteriorates, the ability to deliver goods and services that people came to rely upon via that economic system surrounding a single currency no longer functions. So goods actually become scarce as money becomes abundant.
Yeah.
And so, I don't talk about hyperinflation to scare people, but I'm saying if we look at the patterns that are in our life and we compare it to other examples in history, we're in the middle of it.
Yeah.
And how long can it be sustained when Bitcoin is there as a much more viable option to be the off ramp to? Yeah. It's hard to believe that humans can both be rational and allow this to persist another 10 years. Maybe I'm wrong.
I don't disagree with much of that. I mean, I posted the meme the other day of all the ships sinking, and the the ship was sinking like the slowest. And I just said, USD bulls don't realize their unit of account is wrong, because you see it happening in Turkey. The Turkish liras dropped 90% to the US dollar. Venezuela, Lebanon, and Argentina, you can just name them off. The dollar staying strong, but again, if you price it in S&P 500, it's down 65% in the last 4 years.
Yeah.
It's down 50% to steak, down 50% to gas, down 40% to U.S. median real estate, et cetera, right? So the dollar's crashing too, so we're seeing that, right? I certainly don't disagree. And, whether it's inflation or hyperinflation, it's the same thing. I think we're in the crack up boom, which is basically essentially the same thing, right? Ludwig von Mises says that, and then suddenly, back to your book, and then suddenly people realize that inflation is both permanent and intentional. And so a lot of this talk of the Fed keep going, we have to get back to 2% inflation, 2%. People realize it's intentional and permanent. And then as Mises says, they'll quickly go out and try to exchange their currency for any type of asset they can, which I think is one reason why when the Fed raised the rates at the fastest rate in history, and everyone said, when mortgage rates go from 3% to 8%, home prices have to come down. They have to, but they didn't. And they said, well, stock prices have to get repriced lower. They have to. They didn't. Part of it is I think people are realizing that they don't want to go back to currency. They'd rather just hold the asset, even if it's an inferior asset for now, because the information gap to Bitcoin hasn't been present yet. The one thing that we were saying before we started recording, though, is I was saying that I think that Bitcoin, a lot of times in Bitcoin, we hear that for Bitcoin to be worth $1 million or $5 million or $10 million, then the dollar would be worthless. And I was saying that it doesn't necessarily have to be that way, because Bitcoin could steal value from other things. So it could pull value from gold or pull value from bonds, and the dollar could still be functioning. And you're thinking that that's not the case. At least
what I'm saying is I would still think that the dollar's functioning when Bitcoin's the same size of it. I'm just saying that becomes the tipping point where it's susceptible to a run, and so, if GM devalued their currency by 50% and then 99% over the course of 3 years, there were still people using bolivars to make ends meet. It was working less and less well. I just look at it as Bitcoin is going to steal purchasing power for things that started to become used like money substitutes because the money was bad.
Right.
But what it's really competing against is the dollar as money. It's just that these other things that people started to turn to because they had bad money will also decline in purchasing power.
So will it gobble those up first?
I think so.
Before it gets the money. So it's the money substitutes.
I think it will be both. I think it will be the money and the money substitutes. The thing that don't fall into money substitutes in my world are like, you need oil on a recurring basis. You need gas on a recurring basis.
Right.
You need steel. You need telecommunication. You need productive assets that have to be delivered on demand, right? That those things, like someone might buy the S&P 500 as a store of value, but AT&T that is part of the S&P 500 is not the S&P 500. It's actually
a productive asset.
Sure. And so
it's like Warren Buffett says that he doesn't buy stocks. he buys companies that just happen to be publicly traded. So he's
Yeah.
buying productive, and that's his whole thing. He wants to buy
He's
companies.
intentional. He's making
Yeah.
a perspective on a segment of the economy and its utility relative to other things.
Right.
And so it's not to say that Bitcoin's not going to obsolete AT&T. It's not going to obsolete the need to have people out in West Texas drilling oil.
Right.
Producing power.
Yeah.
It's just that the things that people are owning in a passive way, and it's hard to put your finger on exactly what that is, right?
Yeah.
What's productive and what's unproductive, or what's active versus what's passive. Like, somebody might be a real estate developer, and if you take a bunch of raw materials and put it together into a productive asset, you've just created value.
Right.
If you are somebody that is looking at the S&P 500 and just saying like, well, I know that my money declines by 4%, and so therefore I'm going to take all of my savings and put it in the S&P 500 because it's a better savings vehicle. Like, you're going to change that behavior. So while it's difficult to put your finger on exactly what the malinvestment is, I like to say, you know it when you see it.
Sure.
And most people in their own lives will figure out what their intentional, I'm investing in this because I think that this really needs to exist in the world, and it's going to deliver a lot of value to a lot of people, which is going to generate me a return.
Right.
That's very different than, I know my money's inflating away, so I'm not going to hold cash because cash is trash.
Right. You said before we started recording, I was talking about real estate and Bitcoin and saying how we could buy real estate and then use tax advantages and debt, and then we end up with more money. We could buy more Bitcoin with it. And you were saying, well, that assumes that we still have a functioning credit market and we can still get loans for Bitcoin and for real estate and things like that. So as part of this transition, then you envision, I guess if the dollar is declining, then you don't have the dollar debt-based system to get loans on either.
Yeah, or it becomes more apparent that capital isn't free, and that so it
has a much higher cost of capital.
Yeah, and that the way that I look at it is that the way that we're going to transition, there's still going to be credit markets, but it's going to flip where it's going to say you want to buy that building to do some activity to generate a return. Someone's going to be lending Bitcoin on it.
Yeah.
Then I view that world when Bitcoin's more stable, when we have this, kind of global adoption event that happens more rapidly, then that shift.
Is that still in this 8 to 10 year time frame?
I would think that it was probably sometime beyond that. Like, we kind of, the world rapidly shifts to Bitcoin when it becomes apparent that it's one.
Yeah.
And then from there, I think capital markets start to reform on top of a Bitcoin standard. Often some people think that like debt is inconsistent with Bitcoin. I don't think so. There was debt on a gold money standard.
I agree. I agree with that.
It's just it's a way to allocate capital. I think that what exists today is that the credit system is multiples. Well, right now it used to be an order of magnitude. As they've printed money to deleverage the system, it's the credit system is no longer orders of magnitude.
Right.
But it is multiples. The credit system is multiples of the base money supply. My view, it will be a fraction. There will be some percentage. There will only be 21 million Bitcoin, and some percentage of them are going to be lent out to help produce productive assets.
Right.
And so I think that yes, like as we move forward, the ability, with interest rates being high, it's the cost of money, right? And your cost of money is always some other asset that might store value better. And so like when we see things like Silicon Valley Bank evaporate overnight and First Republic, those systems, those systemic issues in the banking system exist. Like, did those banks actually have money to lend?
Of course not.
Of course not.
Yeah.
And so as that currency system fractures, the credit system fractures too. Like I was listening to a podcast last night with Marty and a guy from Colorado Craft Beef, and he was talking about just how hard it is now to get credit.
Yeah.
To go do something productive. So there are certainly going to be pockets, right? If you are a very wealthy individual and you have all these assets, you still probably will be able to borrow against those assets to get some dollars to then convert them into Bitcoin and benefit from that. But as a system as a whole, that does not exist, or I don't think will be attainable by, or it will be attainable by fewer and fewer people as the currency system structures, because the currency system is dependent on its credit system, which is that is really the thing that's in the process of collapsing.
Yeah. I have a couple questions on this. One, you talked about in one of your old papers, I forget which one, I've read so many of them, but it's the same argument that my friend Brent Johnson, Santiago Capital makes, Mr. Dollar Milkshake, is that all of those dollars in circulation have massive demand because of the dollar-denominated debt that's on them. So we have only $8 trillion, but we have $80 trillion of US dollar-denominated debt that has to be extinguished or paid back. So there's massive demand. I think you made that case in one of your articles in the past, right? That's the case that he makes all the time.
And a lot of that is in the book too.
Right. So to the point that you're making in this 8-year, 10-year, 12-year transition, I mean, that debt either has to get extinguished by being paid back or defaulted upon. I mean, there's massive demand for these dollars. How do they just disappear like that?
Yeah, so I don't view them as disappearing. I'll tell you how I see the process playing out, and I'll talk to you about how I think Bitcoin plays into it. I talk about this in a number of the chapters of the book, but the nature of the dollar credit system, how that credit system actually is what is allowing the dollar to not immediately collapse, because it's actually what tethers the dollar to real value.
Because there's always more demand every time the dollar is created.
Yeah. And if you want to keep your car and you've got a massive loan, you've got to work for dollars. You're creating demand for
and
dollars.
The whole world has to.
Yeah, because the world is still short dollars. But the world's getting less short dollars as they're printing money. So the way that I see this playing out, and there's a chapter in the book called Bitcoin is the Great Definancialization. And so the way I view this kind of in aggregate, or kind of thinking about it holistically, it's that the debasement of the money is what created this hyper-financialized world. People passively investing in stocks, people, the fact that there could be sovereign debt that at one point in time there was 17 trillion of negative yielding debt.
Right, crazy.
I'm going to pay you to lend you money, basically. Like those things will all go away. But when you think about
which Japan finally stopped having negative yielding debt. Right, just this week, I think.
And I think the fundamental that's forcing that is there's an off ramp now. Like when I don't know if you remember this, but when the ECB put a negative interest rate on their reserves, there was a discussion amongst the banks about like, hey, let's just take the cash and put it in vaults.
Right.
And then they're like, if you want to do that, then you're cut off from our clearing functions of the ECB, so they couldn't really do it. You can convert $100 million into Bitcoin and not have a negative interest rate in terms of how you secure it.
Which you could do into gold too, but it's actually not that easy to get $100 million worth of gold.
Right. But my point being, so the way this cycle plays out is that as people figure out that Bitcoin's a better form of money, they begin to convert their assets. S&P 500, it has massively underperformed Bitcoin, and I'm going to sell some of my S&P 500 ETF and I'm going to buy Bitcoin, or buy the Bitcoin ETF. That asset value starts to come down. Well, the asset values need to support existing debt levels. So as more people figure out that they should sell their passive assets to buy Bitcoin as a passive asset, store value in money rather than a risk-taking endeavor, pressures asset values, which pressures debt. You can't sustain it. So then as those asset prices get impaired, then the credit complex gets impaired. That actually accelerates the need to do more QE. So as that, I think the current estimate of the total credit system in the US, not talking about money supply, but credit system, it's somewhere like 98 trillion.
Okay.
So $8 trillion of base money, 20 to 25 trillion of deposits, 98 trillion of credit instruments. But I think about it as like only dollar reserves can pay dollar debt. So 98 to 8. Well, as people start selling assets and it impairs the ability to expand the 98, the credit system is so leveraged that as soon as it starts to contract or really even have slow growth, it starts to feed on itself. It becomes this waterfall effect.
Well, as I said, we're getting
defaults.
40 cents of growth for $1 and it goes to 20, 10, and then down to zero, right?
Yeah. That credit contraction, because it naturally, due to the degree of leverage, doesn't just, you can gradually grow a credit system, but because it's so leveraged, once it starts to contract, it goes fast. Because it's one default literally causes
Wipes
the
out the
next.
collateral for the next
Yes.
one. Yes.
That induces an acceleration of quantitative easing. Because they can't have that happen. They can't have the credit system collapse. It's what coordinates economic
It's the entire
activity.
system.
Yes.
Yeah.
So they have to print more money, and then that resets off of the loop. Oh, wait, I've heard that I was supposed to buy this Bitcoin because they were going to print money. Now they had to print money. So they print money to try to inflate the credit system or the asset values back up to be able to support credit, but that then just re-triggers the process. So it kind of is this loop of selling financial assets, but then they print more money, and through that, the amount of dollars to debt actually declines because money is becoming more abundant, and that's why as that happens, then people will figure out more en masse because the dollar won't be able to be as tethered to real goods and services.
But dollars are only introduced into the system through debt issuance.
That's not true.
It's not? Well, I guess the fiscal system could drop it from the
It's
helicopter.
introduced through the Fed. If the Fed didn't introduce more base money by clicking a button at the New York Fed to say, hey, JP Morgan, I'll take $1 trillion of your treasuries and...
Yeah, but JP Morgan then has to loan that money out.
What's that?
They have to loan the money. Then JP Morgan has the base reserves.
But they have the base reserves. They now have more reserves.
But we've seen many times in the history where they have more base reserves, but they don't want to loan the money.
But my point is that if the Fed didn't create more base reserves, the credit system would
Or
shrink.
change the reserve requirements or whatever it is.
But no, I'm saying the actual amount of debt would shrink. They can't have that because the whole system would collapse.
Right.
So my point is, and I have a different perspective about this.
Yeah.
Many people would disagree. My view of it is the only way that more money is created is by the Federal Reserve. And if not for that function, then credit couldn't expand ad infinitum. The only thing that allows the credit system to continue to expand is that the Fed went from, in 2008, there was only $900 billion in total.
Yeah.
That has now gone to 8 trillion. If that hadn't gone to 8 trillion, the credit system would have collapsed. At the time of the financial crisis, when there was only $900 billion in existence, the debt system was 52 trillion.
Right.
If they hadn't printed all that, or not really wouldn't printed, digitally created the new money and exchanged them for credit, that 52 trillion would have gone to 40 to 30. It would have just kept going.
Yeah.
And so my point is that money isn't actually created through the expansion of credit. Money is created by the Federal Reserve. That money that the Federal Reserve creates allows for the expansion of credit. It's what allows for debt to not be written off. It allows for asset values to reflate in dollar terms, which allows for existing debt levels to be sustained and then to grow.
It's a little bit of semantics. Because
I don't think it is, but...
You don't think it's the semantics? Because the Federal Reserve allows for the money to be created through debt expansion by giving the bank more reserves or changing the reserve requirements.
But
either way.
that's the increase of the base money. And if they didn't do that, my point is that...
But the Fed could hypothetically, and actually it's not hypothetical because we've seen it, they've increased the base money, they've increased the reserves at the banks, but the banks still don't issue new loans.
No, but the credit system has gone from 52 trillion in 2007
over time
to 98 trillion.
Right.
So the introduction, there's this misnomer, they're not lending out the reserves. Well, you know who's borrowing? You know who they're lending to? The federal government.
Right. Okay. Yeah.
When the federal government has a $2 trillion deficit,
the
banks are lending to the federal government.
Right. They're buying the treasuries, giving the money to the government, which they're spending $7.3 trillion next year. Yeah.
8 trillion of base money has resulted in 50 trillion of more credit.
Yeah. No, you're right. That's a good way to look at it.
And my point is that if that 8 trillion hadn't been introduced, that 50 trillion of expansion couldn't have happened. Not only would it have if they hadn't put the money in, by definition, that 52 trillion that existed at the financial crisis, that was this over-leveraged system, it would have cratered. It would have gone 50 trillion to 40 trillion to 30, because only dollar reserves can be used to pay credit. And what would have happened if they hadn't done that is that every bank would have been out of business. And then what do you have? You have to actually restructure debt. And so that's where I see where Bitcoin comes in. Ultimately, what's going to happen is that people who have Bitcoin are going to be the ones that restructure the world. They're going to be the ones that say, okay, which of these businesses is worth saving that have all this debt stacked against them? What assets do I want to own? Because
they're the only ones that have money, and then they'll buy them out of
working,
bankruptcy at fractions.
They're going to go to the bank and they're going to say, hey, I'll take that note on that oil well, and I'll give you, a Bitcoin for those 10 wells or something, because I think that those assets can generate me more Bitcoin. And so that as the dollar credit system becomes unwound, that there's going to need to be a massive restructuring. Like when I say restructuring, when a business files for bankruptcy, they actually have to restructure their balance sheet, reorganize the company, maybe get rid of old management. But they also have to recapitalize those businesses that they think still need to exist. It's just you're going to have to recapitalize it with money that's actually functional and working.
Yeah, got it. We agree on all this. Some of the timing, a little bit off. I think my view has been we're going into a crash up and not a crash down. I think everybody's been waiting on it. And
crash up in what sense?
Well, in a hyperinflationary sense, right? Everyone was waiting for home prices to crater, but home prices are going up faster and faster and faster. Everybody was waiting for the price of Bitcoin to crash, but Bitcoin's going up faster and faster and faster. So hyperinflationary crash up is what I mean, which is what you're calling for hyperinflation as well. So sort of agreeing on that terms, right?
Yeah, maybe I agree. I would just say that
eventually a crash
maybe standard of living is going down for a large swath of the population.
No, it is. And this is what I've tried to make clear on a bunch of my videos, where I say, if you think of what does a crash mean, or I should say, what is the end result of a crash? So typically in a 2008 or 2000 crash, my standard of living went down. I lost my job. I took a lower paying job. My business doesn't do as good. My income went down. So my standard of living went down. I can't afford as many vacations or going out to eat as much. So in a crash, my standard of living went down. But my standard of living could go down also if things crash up, because things went up so fast, I also can't afford as much as I used to. So the end result of my standard of living going down is the same, regardless if prices crash or crash up. The difference is a crash up, I think, is a lot worse, because at least when they go down, there's a reset and maybe millennials can buy a house. But when they crash up, there's never a chance to get in. I think it's worse.
I see what you're saying.
So the end result being that our standard of living goes down. Now, if we utilize debt and inflation better, some people can get ahead during those periods of time. So if you look at periods of textbook examples of hyperinflation, Weimar Republic, Germany, classic example, you see the Weimar, the German mark to gold, over a 90-year period go through like a hockey stick. I'm sure you're familiar with the case of Hugo Stinnes, who became the richest man in Germany. Are you familiar with the story?
No, I'm actually not.
So he basically realized what was going on, and he borrowed as much German marks as he could, and he turned that into railroads and factories and real productive assets. And when the currency ultimately crashed, he became the richest man in Germany. Not too different than what Michael Saylor is doing today, the speculative attack. Borrowing in the failing currency, buying a stronger asset. So my question for you then is, I guess, do you think that's the playbook for navigating this type of a cycle, a speculative attack? Did Hugo Stinnes play it right? Is Michael Saylor playing it right? Do you borrow in a failing currency to buy a better appreciated asset?
If you are very sophisticated.
If you're Michael Saylor.
If you're Michael Saylor, or you're on the spectrum, you are similarly very financially sophisticated, and you know how to avoid massive time bombs, because, and I don't have a full reading on everything that Michael Saylor's doing, but one of the things he's doing is convertible debt, right? One of the things about debt is it creates a time bomb. So that, if you could continue to borrow and know that you could, like if you could lock in at 2% for 30 years, and that, that's a different thing than
I bought this at 3% for 30 years.
Right.
Seems like a pretty good deal.
Yeah, but if you were someone that was like, okay, someone's willing to let me,
I'm going to charge my credit card 18% to do something like that.
But if you're like, someone's willing to let me, money at 10% for 2 years, I'm going to go buy Bitcoin.
Right.
And now I have a clock running.
Right.
That you could get real backwards.
Right.
So what I'm saying is there's a scenario that can be a winning strategy for people that know how to protect against the really downside and cataclysmic outcomes, and just to know where you are on that spectrum.
Yeah. Because
I'm personally someone, and like most people would say I'm insane. I don't have a cent of debt. Okay, I just don't like it. I don't like owing another man money. Like I don't. That there's a psychology. There's a great book. It's called A World in Debt. And it talks about the psychology and what it does to society. So I think that you can do that and you can improve your life. Can the aggregate of people do that? I don't think so. Yeah. So I would recommend it for people that are highly sophisticated and know what they're doing, maybe more so than I do. But I would say for the average person, it's going to be very difficult, and it comes with pitfalls. And it's to stay humble, and stack sats. Yeah. If you can just slowly, if you're generating income and you can slowly put away for a rainy day, and you're doing it in a better form of money, then that's going to be an incredibly freeing endeavor for you, because all we're really trying to do is preserve value that we've already created.
Yeah. And we're trying to increase the value that we have, and we can push more value.
Oh yeah, no, as well. But part of that is, it's not just sitting on a shiny object and looking at it and observing it. Right. It's how do I put that to use in a way that literally allows me to accumulate capital. Yeah. Yeah. So I think there's multiple ways to pursue it.
A business which is actually helping productive assets businesses move into a Bitcoin standard. So tell us about that if we can.
Yeah, just quickly. So we're helping build a company that is designed to help businesses move to a Bitcoin standard from the ability to accept it for payment. And really what I like to think about is, if you don't understand why Bitcoin stores value, and you don't understand this, you probably shouldn't be thinking about your business accepting Bitcoin as payment. You should probably buy a graduate and suddenly read a book.
Definitely.
Start to ground yourself. But for people that already understand why Bitcoin stores value, it becomes hyper logical, if you are a business owner, to start to accept Bitcoin as payment. You have to build the tools in order for businesses to accept them. And that's really what we're focused on. Through Zaprite, basically, our view of it is, in order for businesses to accept Bitcoin as payment, they need the right tools. In our world, that means that they can easily accept fiat side by side with Bitcoin, and that if they've already become comfortable custodying their Bitcoin a certain way, they don't have to worry about us as a financial intermediary. We never touch their money. They basically bring their own wallet. So Bitcoin can be used as a medium of direct exchange. The people that are likely going to pursue that are people who already understand Bitcoin. And as we're building this out, it also demonstrates the utility of Bitcoin, that it isn't just something that is something that's storing value. It's only storing value because it's easy to exchange. That's what money is designed to do. Money is only a utility, as a tool to facilitate trade. If it's not facilitating trade, then we're not accumulating capital. So we're really just trying to advance that side of Bitcoin. I started working on it when those banks failed last year. It heightened the radar in my mind that said we need to act with greater urgency to create the rails of Bitcoin in a way that it can actually facilitate commerce. And that when you think about it, if the currency is a risk, oftentimes when Silicon Valley Bank failed, a lot of companies, as they rightly should have said, that bank to a Silicon Valley Bank, how am I going to make payroll on Monday? Yeah. But that same bank is how they take in their revenue. So it's not just a choke point on their balance sheet and their savings. It cuts them off
to accept money,
from access to accept money.
Yeah. And
so we need better ways to custody Bitcoin. Worked on Unchained for a long time. That really is a root of a store and hold of value. It can't be at risk of losing it. You've got to be able to safe keep it with a reliability that 5 years from now, 10 years from now, 15 years from now, your kids are going to have it. But the other side of it is, I've got to be able to accept it. I've got to be able to accept, in my business, for the revenue side of my equation. And so really just advancing that, and we really recommend it for anybody that already understands and groks Bitcoin. And encourage people that don't to start the journey by becoming educated first. But we're really building the platform for people who already understand Bitcoin and understand the value of why having that redundant rail, like if your currency is a risk, which it is, then the rails of that system are also a risk. It's the flow of funds, and on the other side of flow of funds is goods and services.
I love it. I love it because we don't need a whole bunch of more ways to we do. We need a lot more ideas of ways to use Bitcoin, but we need to come up with more ways we can bring Bitcoin into the things that we do already every day. So bring it into your existing business to help offset some of the risk and stack some sats along the way is an amazing way to do it. Yeah,
and really there's two ways to get sats. You can convert your goods and services or your rent on a building or your fees for an Airbnb into dollars, and then take those dollars and incur the cost of the dollar system and get Bitcoin if you want the Bitcoin. Or you could be set up in a way to say, hey, if people want to pay me directly, if I actually want the Bitcoin and someone's willing to pay me the Bitcoin, then you start to be able to understand very easily why an entirely different currency system is a cost. And so there's two ways. You either go through the fiat system to then get Bitcoin at an exchange, or you go directly to your customers.
Skip the on-ramp and the off-ramp.
Yeah.
Go directly.
Yep.
All right, Parker Lewis, brand new book, Gradually Then Suddenly. Recommend you pick it up. I haven't read it yet, but I have read the papers, and I can't wait to read the full book. Check out Zaprite. You should be accepting Bitcoin in your business. I want to accept it in my business. We're going to talk about setting that up. And that's what we got. Check out Parker.
One thing I would say is the book's available at Buck the Trend. It's not on Amazon.
Oh, Buck the Trend.
It's on Safe Dean Amuse's website, the author of the Bitcoin Standard. So thesafehouse.com is where you can buy the book.
Thesafehouse.com. We'll link it in the show notes down below.
Appreciate it.